Welcome to NQ Ninja. My name is Aaron, and in this 2026 year, I plan on making videos on the NQ charts and how to read technicals and to understand how to and what to look for when we're taking trades with NQ. I trade on prop firms and I leverage their money to take my own trades and to make money that way through payouts. And so we'll talk about that more as the year progresses. But I just want to kind of show some things with what I'm seeing on the charts. And then as we go, if you subscribe to this channel, we'll hopefully kind of learn together and understand what we're seeing from the charts. So if I look at this chart, just offhand, right, it doesn't really show me a lot, right? It does show me a lot. I see many things, but it's taken me years to understand what to look at here. So the first things first that I want to kind of explain to you is I try to see things from a simple perspective, right? I don't want to use a bunch of crazy indicators and so forth. I do want to be able to read the candles as they are and be able to react based on what I'm seeing. So I am a multi time frame trader. I think understanding the time frame. So what I look at is the daily. I'll look at the 4 hour, the 1, 30, 15, 5, and 2 minute. So typically I take my trades on the 2 minute, but I do want to understand what these higher time frames are doing, right? So the first thing I want to show you here is that we're creating what are called lower highs. So we have a high, we have a lower high, we have a lower high. Okay. So we're kind of stair stepping our way down. So what does that indicate? It indicates weakness, right? So what that means is we've tried to come down, we tried to bounce back up. We actually couldn't get all the way up. We actually couldn't get it from here to this area. We weren't able to get to this section. So we actually pushed back down. We try to attempt again to go up, we actually got even lower, right? We can see here, we're not getting this part of it, right? So we're moving back down. So that's the first thing I'm really seeing when I'm looking at this chart. So one thing that I really kind of focus on is what's called structure. Okay. There's several folks that over the years I've really learned from, and the structure of the market is very valuable. Okay. So when I'm looking at this daily, I don't typically look at the daily for my structures, but it shows me certain things, right? And so right now, one thing I want to show you is that the structure here could be an inverse, what's called an inverse cup and handle. Okay. Now I call this an M pattern, but many people will call this a cup, pull back up to handle. Okay. So that's the structure that we're seeing. So in my mind, I'm thinking this could be weakness in the market at the moment as it pertains to NQ on the daily. The other thing I want to explain to you here is that this candle that we recently had on Friday, so on Friday the 2nd, I'm sorry, Friday the 2nd, January 2nd, 2026. This is a bearish engulfing candle. What does that mean? What that means is that this particular candle went above the previous high and below the previous low. So it's actually covered both of them, right? So it's actually gone on both sides of this previous candle. Now, why is that significant? What that means is at some point, this candle will probably go up a little bit and potentially go to this area. Now, at some point, we actually have to fill. So when we talk about engulfing candles, this is a little cheat code that you can kind of use to your advantage. But you will notice that over time, bearish engulfing candles, such as this one, you're always going to have to fill the bottom. So at some point, either the next candle or one of the preceding candles is going to have to break through this low. Okay. So what I want to do is I want to make a note of that. Okay. So I'm going to use uh, this line and I'm going to make a note on here of the daily bearish engulfing. Okay. So I made a note of that. I got these little dots You can delete those, but that's okay. All right, so that's what we see from the daily. Let's go down to the hourly. The next thing I really want to show is what is the hourly showing me here, right? So I'm gonna delete some of this. What is the hourly giving me here? Okay. Let's see. I do have my day. I have my bearish engulfing. The next thing I really want to show is zones. So the market is all about liquidity. So we build liquidity, we make moves. We build liquidity, we make moves. That's how the market works, right? That's how these charts work. So if I hover this section, you can see I have liquidity. So liquidity is nothing more than price action, uh, really building in those areas to then make a move either up or down. So you can see in this, for example, in this situation, we're really built for a while in this area. Okay, we might have made a move up and down, but once we broke out of that area, right? So once we got below this section here, once we broke this area, we really broke down, we built back up, a controlled move up to then sell off again, controlled move up to sell off again, right? And these are just bear flags. So I'm not gonna talk about the bear flags at the moment. I want to talk about this structure that we're seeing. So this is areas that we need to understand. So what I'm going to do is I'm going to make zones on my chart of areas that have a lot of liquidity. Okay. So I'm going to mark this section. We're going to call it supply. So supply is anything that's above us. That's liquidity. So now that we've marked that, we could potentially move back up to this area. And if we did, I would be very careful to take a long in this area, knowing what we've done in the past, right? Okay. The next thing I want to show is what are some other areas of liquidity that we can show here. So looks like this area right here. See right here. You can see here we have a lot of liquidity. We have some here, right? All right. I'm actually going to make this so right now I'm actually going to make this my demand zone. Why is it demand? So it's demand because we're actually sitting on top of it. We're not it's not above us, it's actually below us. Okay. So I'm going to make this area and then I'm going to move this down to about right there. Okay. So again, I don't have to be to the point. I just need to understand that this area is an area of, if I'm in a trade, I need to be very careful in these two sections, these areas. Okay. So you can see what we're doing. We're kind of adding to our charts. So a chart that looks like just a bunch of candles, now it's really coming along to say, okay, this is an area you want to be careful with longs. This is an area down here in the green that you want to be careful with shorts, right? So we don't really go short um, unless we see just continued weakness, okay? So that is the zones of liquidity. Now, the other thing I really want to show you here is the structure. So what type of structure do we see currently? I see this as a potential inverse cup, okay? So I can see this as an inverse cup that comes down to this area down here. And so for that reason, I'm going to make this right here another zone. I'm going to scroll out and say, is there anything that would make sense for this to move over in this area? There is, right? You can see as I'm doing this, these are areas that we really we bounced out of it, right? So this is an area here. You can see an area here, and this is where we bounced earlier. Okay, so I'm going to use that to my advantage and say, okay, this is a possibility if we are weak. Now you always have to look at both sides. Are we going to be weak or are we going to be strong? You have to look at both sides of the market. A lot of folks that are starting off in the market, they want to pick one side and stick with it, right? And just hope for the best. You can't hope in the market, right? If you hope, I promise you will lose. You will become hopeless if you do that, okay? So let's go ahead and remove this. And I'm sorry, I want to put this back in here. All right, so we have our area. So this could come down more. Now, what do I want to look at now? So we've seen this. I want to go down to the 30 minute, a 30 minute. Let's see what the 30 minutes gives us. We're building liquidity. Again, this is the weekend, so I'm really just preparing for the week. What can I see? If we're going to be strong, what we're going to do is um, we got to build a case for both. If we're going to be strong, we're going to build liquidity in this area. I could see us potentially making a W here. So it's not an M, but a W, and then push up. Okay. So this area and this area. So come down. We're trying to make a move up. This might bounce back into this demand area and then push back to the upside. Okay. If we're going to be strong. If we're going to be weak, what's going to happen is we see this breakdown. We could start to create a channel here to the upside. So I'm going to go ahead and draw a channel here, something like this. So we could just start building liquidity right up on this bear flag to then get a break below the bear flag, below this demand zone, and then maybe down to this area down here. Okay. And then that would make sense with our structure that we're looking at here. Okay. So that's something else I'm looking at. Always looking at the probabilities of each thing. If we did break down, it does make sense because you have this daily bearish engulfing. Don't forget about that. But we do not want to take that short until we have confirmation of this area right here. We break out of it, right? We may retest. Maybe we retest that line here, and then we reject that line to the downside. That is what I'm really looking for. So I'm not looking to jump in early here with a short, right? Because what could happen here? That could easily move back up. Easily move back up. So just want to be careful that you don't want to jump in too early. So that's what we're looking at there. Let's go ahead and jump down to the 5-minute. And what are we seeing on the 5-minute? Again, in this video, I really just want to kind of explain the structure and what I'm seeing and just describing of how I trade. Okay. Now, we do have to bear in mind that this was a Friday. And so Friday afternoon, December 2nd, or I'm sorry, January 2nd, there's not going to be a lot of action going on in the afternoon, right? Most of our action is going to happen in the morning. You can see this is the 9:45 candle. And that's what we got. We got the move here. Now, how could I have looked at this in the morning? Okay. So this area up here I actually had already marked. This morning I actually took a short out of this zone down, which was a nice move. And then I called it a day, right? I'm looking for typically around um, 20 points. I take 5 MNQ, so I'm looking for about $200 to $300 a day. That's all I'm looking for, right? But again, it's not based on the money. It's based on what the charts are showing me, okay? So how can I look at this chart and understand what's going on? Once I bounced out of this zone, we created basically this structure that looked something like this, okay? So went down. I'm not going to do that. That doesn't look good. But basically, we went down here, right? We had a controlled move back up. We broke this, and you can see exactly what I talked about before, right? We're retesting right here. You can see it. I'm going to take this, and right here, this candle right here, right? This candle here is retesting and then breaking out. That's a beautiful trade to the downside, right? And where did it go? It went to this zone down here, this demand zone. And look, you can see all these wicks that we've created here, right? We can't get lower. So at this point, the day was really over. Not much action after that. You can see that right here, we're really just starting to kind of what people call this a chop box. We did have a little bit of a move in the after hours here, or at 2 o'clock, we moved up in this channel. I would say the only other play on the day that you could kind of see if you're reading the way I'm seeing it is you did have this move up. We created this top. We pulled down. We then attempted to try to go back up. You can see that this is actually below the previous high. So we created this M pattern. And so in this situation, in my mind, I'm thinking, okay, this could be a potential play to the upside, or I'm sorry, to the downside, if we can break this channel. And that's exactly what we did, right? So I would take this, I would actually then look at the 2-minute. The 2 minutes were really going to kind of help me decide, okay, what does this really look like? So I'm going to make this here. We're going to pull this down, and you can see right here. So we moved up. We started to really kind of break through. This candle here broke down. This went down, up, and then we just broke down from there, right? So once I retested this channel, that's where I probably would have taken my trade to the downside. And where do you take it to, right? Um, in this situation, I am seeing this is the bottom of this channel, so I would probably say something in this area right here, right? So once we got down to probably this 395 level, that's where I would have taken off the table. So you can see right here, 430 to 395. That's a pretty good move, and that's really all you need in a day, right? That little bit right there, 5 MNQ. Again, I'm not taking, a bunch of NQs. Um, my accounts are only what 2,000, right? If you're playing with a prop firm, a 50K account, so you shouldn't be using NQ. You should be using MNQ because that's going to allow you more flexibility in your trades. Okay. So again, this year I'm going to really kind of talk through a lot of what I'm seeing in the charts. I'm hoping this will be helpful for some folks. Again, make sure you subscribe. Leave something in the comments if there's questions or any comments. I would appreciate it, and look forward to the next video.